Jose, welcome to the podcast. I'm super excited to have you here.
Thank you. I'm very excited to be here.
All right, let's start off with an introduction. Tell us a little bit about who you are and what you do.
My name is Jose Tejada. I am Vice President of Mortgage Lending in Beverly Hills. I do mortgage lending. I help families and individuals find homes, refinance homes. My background is in wealth management. I spent over a decade advising what we would label the mass affluent segment. So, what that means is just $1 million in investable assets or more. So, I spent 11 years working with families in that space. But I grew up in banking in my entire life. I got into banking when I was just 20 years old because Blockbuster wouldn't hire me. I really wanted to work at Blockbuster, but they wouldn't hire me. And out of anger, one day I walked across the street to a bank called Washington Mutual, which, depending on how old you are, you may or may not know about it. It used to be a national bank, and I started my career in banking there that led to here now. I'm
I think you
also
made a good choice because Blockbuster, as we know, is an obsolete business where finances is roaring. So,
they're now just an example. They're just a cautionary tale now.
absolutely. Okay, so let's talk about you and your history growing up. Were you in a family that was in the financial industry, or was this new territory for you?
Yeah, no, not at all. So I'm from El Salvador. I was born there. I'm the oldest of three. My brother is second and my sister is last. The reason we end up in America is because there was a big war in El Salvador. There was a big civil war. And so we end up here via an amnesty program. And so you could have either ended up in Canada, the US, or in Australia. So, fun fact, the third largest congregation of Salvadorians in the world is in Australia.
Wow, I had no idea.
Google it. I promise you it's true. By coincidence, we end up in Queens, New York, young parents in their 20s and three kids and a whole nother world. I grew up in finance really by coincidence, truly with that story that I just told you about Blockbuster, but then I get deep into it after being connected through just the community and the lack of financial understanding from the community. So I sit on a lot of boards and I do a lot of nonprofit around financial literacy with the youth and also with the Hispanic community because of that disparity that you get from the old country to the new country, right? And for me, a little bit different than a lot of my friends or colleagues, I am the immigrant. I was 10 years old when I came here, not the children of immigrants. So what happens is you go through a different dynamic. I don't know if you've ever seen that meme that says like, I was reading contracts at 12. Like, don't mind, I practically got a law degree by 16. I was that kid, right?
Yeah, absolutely. You're signing checks and paying bills, and you're like 9 years old, and you're translating legal documents because that's just kind of the role that you have to play.
Yeah, exactly. Porque tú sabes inglés, tú léelo. Like,
Absolutely. So I'm curious for somebody who has the immigrant background and then you find yourself working in the wealth management industry. Were there ever moments where you were like, what the hell am I doing here?
totally.
Tell me
I've
about that.
heard I've heard some of your shows talk about imposter syndrome, and that's something that has been very present in my life. A ton of it coming around. I tell this story that when I was a branch manager and I was a banker, and there was a lot of Jose's, right? And then eventually I got to a point in my career where I was in wealth management and dealing with these very complicated entrepreneurs and businesses and people. And I was like, the Jose. Like if you said Jose, it was me. And so what happens for me, at least in my story, being here in the west side of LA, Beverly Hills, Century City, Brentwood, Westwood, I didn't have the pedigree that some of my colleagues had. I didn't have the USCs and the Harvards and the whatever degrees. And it was a long time, but thankfully not, I think, overall, big picture, so long that I just learned that leaning into my story was the strength. So then I started telling people about how I came to the country and the things that my family has done and my mother has done, the things that we went through growing up. And then what I found was those gals couldn't relate to that background. So then it became more of a shared experience. As opposed to we're competing in the same, we weren't. It was more like now we're collaborating, right? Now you
Mhm.
have this and I have that, let's put it together. And that helped me with my clients a lot. It helped me connect with my clients and the families in terms of just, it wasn't like I was trying to reach for something that I could never reach, really, right? I can't go back in time and go to Harvard. It was more like I got this other type of knowledge, or
Mhm.
experience.
Yeah, so tell me about the transition between wealth management and now you working in the lending industry. How did that come about?
Yeah, so coming out of Washington Mutual is what you would call a savings and loan type of bank. So they save money and they lend money out. Going into the next company after the crash in 2008, I went to a company called MUFG, Mitsubishi Utsumoto Financial Group. And Here in LA, it's Union Bank, is what the retail version of it is. There, I really learned the complexities of finance, commercial lending, business lending, financial services, etc. So coming into that, I really learned that lending was my thing, my magic, my sauce, right? I had the background on it from Washington Mutual. I've been lending since I was 21 years old. And even though I enjoy and understand financial services and I believe the strength around it, my thing is that structure. So I just in 2019, I just went out and dove right into it, and it's been a good run so far. Thank God.
Yeah, I love that. Thank you for sharing your background. I think that's really helpful from a context perspective. Now, I wanted to bring you on the show because there's a lot of entrepreneurs that listen to Yo Quiero Dinero, and they have all of the same dreams that a 9 to 5 W 2 worker would have. Things around like being able to buy a car or buy a house. But there's a lot of stories. I don't know if it's rumors or if it's actual experience where folks are having harder times getting loans when you have that fluctuating income that comes with entrepreneurship. So, first off, is it actually true that it's harder to get like a mortgage, for example, as a business owner than it is as a paycheck W 2 worker?
Short answer, yes, it
Okay.
is. And here's why. You got to understand the logic behind what the underwriter is trying to figure out. So the way that I explain it is underwriting is looking at the past to predict the future. I had a client, for example, she was very excited. She's like, Jose, I left my corporate job. I just opened my business and I think I'm ready to buy a house. Girlfriend, you're not ready to buy a house. And here's why. You've only been in business for like a month. The underwriter can't look at the past and predict the future. We don't know, right? So the general rule, for example, for a business owner is you need to be in business for at least 2 years because why? Statistically, most businesses are going to fail within 2 years. So if you survive 2 years, now on a conventional financing sphere, the lender is willing to go back and say, okay, let's look at what you did in the last 2 years, right? So, but now let's take that into a practical sense. What happens in that first year? You're going to tank everything in your business economically, right? You're going to take every write off possible you're going to take. So for most business owners, that first year looks not so good. I don't want to say by design, but it just happens to be a very expensive year. It's a year that you're launching, and it's a year that you're going to have a lot of expenses to write off. And so we have a friend in common, Shannon, and then we were talking about with her in the sense that it's about planning, like where the timing that you're taking those deductions and really projecting where you are going to want to be in the future.
So essentially, what you should be doing, let's say you want to buy a house in 2023, you should be already showing on paper that you're going to be able to pay for this from either increasing potentially your salary that you're paying yourself from a business perspective or keeping more of your profits versus writing things off so that you have a proof of sustainable cash flow and enough income for you to be able to qualify for a loan.
Exactly. And this is where having a strong accounting team and a strong lender kind of work together makes a lot of sense because here's the thing, and this is going back to the whole financial literacy part of it. In our community, it's very common that you hear the rich get all the breaks. And the fact is that the rules are the rules. The rules are for whoever knows the rules, right? There's no like special rule book for the wealthy. It's just the rules are what they are. But most people, a lot of times people don't even know how to find them or know what they are, so they don't know how to take advantage of them. In what constitutes lending, for example, there are deductions you can easily take that don't impact your actual underwriting, your cash flow of your loan. But unless you know that, I'll give you an example. It looks like you're working maybe from home right now. If you're working from home, that's a deduction on your tax return. But guess what? That deduction doesn't impact your loan. We add that back. So that's a clear example where you can take it off a deduction on your tax return, but it doesn't hurt you on your cash flow for your loan. It's incredible how many tax returns I see where I know the person's working from a home office, but that doesn't show up on the return.
Yeah. I think a lot of these things tend to happen when people try to DIY their financial statements, they try to DIY their taxes. It's a terrible decision, I think, for most of us, but especially if you're an entrepreneur. Would you agree?
100%. I mean, having an accountant, for example, is the most critical expense you can have in your business because as a business owner, you are setting yourself back years. To your comment earlier before about 2023, you're going to set yourself back years if you're not doing proper planning today. Going back to the young lady, she's like, well, what do I do? I go, you find a time machine and go back in time and buy your house before you quit your $150,000 a year job. I have no doubt she's going to succeed. It's just that there's got to be a rationale for a lender giving you hundreds of thousands of dollars or sometimes millions of dollars And it can't be like, I'm really good at what I do, you know?
Mhm. Is there any impact on, like, having a formal business entity versus just being, like, a sole proprietor from a lending perspective?
Oh, that's a great question. Yeah. So, first, the way that we underwrite a file does vary depending on the entity. So, a sole prop is going to have certain write ups that an S Corp won't, and an S Corp is going to have certain write ups that a C Corp won't, for example. In most cases, if you, when you're starting out, and this is you and your accountant question, but in most cases, a Schedule C at a sole proprietorship is perfectly fine. You don't need to be super complicated and go out and get a S corporation until you need an S corporation. And your accountant's going to tell you when that time is. It'll depend on the kind of income that you're actually pulling in. But one mistake that I see with entrepreneurs, for example, is that they get very excited and optimistic about what's going to happen with their business. And then they go and they start all these LLCs and S Corps, and they just die. They don't do anything. And you still got to file taxes and you still got to pay for them, but they don't go anywhere. And that's just a clear sign of not having proper planning and advice.
Absolutely. I think the recurring theme that I've heard from not just talking to you, but just like entrepreneurs in general is like if you don't have a team of people who are going to help you get to your goal, it's going to be so much more difficult. You're going to be flying blind basically instead of having a plan in place to anticipate like what are those things that you're going to need in order for to make this a reality.
Yeah, so one of my favorite sayings is rocket science isn't hard to rocket scientists. And I think that that's how I live my life, run my business. It's like, I don't need to do everything. I just need to figure out who can do it for me. I need to do what I do, right?
Absolutely. Okay, so let's talk about the down payment. Is an entrepreneur going to be able to put down the same 5%, 10% that somebody with a paycheck could? Or are we going to have to put down more?
Yeah, absolutely. That has nothing to do with anything in terms of the rules of the loan program would work. The down payments apply across the board. They don't change depending on what your income source is. What changes the way that the cash flow is reviewed. So that's what really would matter in terms of an entrepreneur.
All right, cool. And from the credit perspective, does it matter if you want to, let's say, buy real estate in your business name? What should you be thinking about from that perspective?
So if you're going to buy real estate in your business name, you can only buy investment property under your business name. You're going to get told by your accountant that you shouldn't do that. And so you wouldn't do that in a business that you're operating. You would do that in an LLC, a separate entity that would then hold that real estate. That's the proper way of doing it. Even if you're buying a building that you're operating out of. So what you would normally see in a situation like that is you've come to the point where you're generating so much income that you have to kind of, from a planning perspective, buy your own space. You're going to buy that space in a separate entity that's going to rent from your business. And that's kind of the way that the proper accounting would go. But you wouldn't. You couldn't buy a personal use residence under an entity name. You can only buy investment property. But if you're buying it in terms of for your personal use, credit score would not matter whether you're a self-employed person or not. It just matters on whether it fits the program or not.
Okay. Do you have any advice on how to start building your business credit? Because I feel like there's a lot of crap on social media about how to establish your business credit so you can go and buy like a Mercedes Benz G Wagon and then deduct a whole thing off of your taxes and blah, blah,
Oh
blah.
my God, so much.
Any
Yeah.
advice on like what is actually like a good, responsible way to start building business credit?
Business credit stems off of personal credit. So first, you need to kind of take care of your own credit. Make sure that you don't have late payments. Make sure that you have enough credit. A lot of the times, people don't have bad credit because they just don't have enough credit. An important thing to note, for example, is that most lending programs, and the vast majority of them, are going to require you to have 3 open trade lines at minimum. That means 3 credit cards, whatever it is. 3 people must be lending to you at a time for you to even be considered worthy. And I've come across cases where that's been a challenge. I get it, you're being very conservative, but at the same time, there needs to be some basis for the lender to determine whether you're credit worthy or not. After a business has been established for, say, like 2 years, then you can go and start applying for business lines of credits at like your local credit union or bank, or business credit cards through like whatever companies. And then that will start building your business credit. You're not going to get anything before 2 years generally. Nothing that isn't like a Shark Tank deal. You know what I mean? It's going to be very tough until then.
Yeah. So I had an interesting scenario where I was getting qualified to get a mortgage in Puerto Rico. And the lender actually asked me if I had a prenup because I wanted to have the loan in my name only without my husband. Like, when does that apply? Is that like a state by state thing or how does that work?
You got it exactly right. It is a state by state thing. So I'm licensed in 5 states. And so we kind of have to keep that in mind when we're doing different deals. One of the issues, for example, I'm in California right now, right? It's a community property state. In fact, we're just dealing with a case before I came on here where we need to figure out how we're going to separate that asset because by nature of state law, that asset that the husband doesn't want the wife to share upon is going to be included unless she signs a document saying, I'm excluding myself from it. And so when you have a community property state, that's where those issues are going to come about.
Okay, that's good to know. So then in the event that you don't have a prenup in place that would separate those assets, so what would that documentation look like? Would it just be like the lender giving
No,
you
it's
a
actually from the
document?
title company. It would be from a
Got it.
title company. Tad bit to note, which is just kind of interesting what's happening right now, is that we're getting an overflow of foreign investors buying real estate in the United States right now, at a micro level in Puerto Rico. And the reason why has to do with this idea of title. Most countries in the world don't have title. Like I'm from El Salvador, right? Like
Mhm.
if I have a house there and I leave it for 10 years, I come back, it's not my house. Like somebody else's house. Like somebody moved in and it's their
Right.
house, right? The idea of title is what creates value in USA real estate. And so that's why it's such an important thing when you're transacting property. And a lot of people take it for granted and you shouldn't. So the way you label things matters. It matters oh so much, especially when you're dealing with a community property state and sometimes relationships don't end up working out. The idea of state planning matters so much. Well, your wills and trust and that whole conversation. I don't know if I answered the question, but
No, yeah, that's really helpful to know. That was something that surprised me when I was in the process of just getting qualified. So I think it's important to understand what the laws are in your state and
But
act
it would come from the
accordingly.
title company. That was your question. It would come from your title company, not from the lender itself.
Got it. Okay. All right. So, what are your best tips for entrepreneurs to start setting up their finances in a way that's going to them allow them to access capital quickly? I know you mentioned making sure that you have at least 2 years of proven income. Is there anything else we should be thinking about from a paperwork perspective?
I think that like you said from the beginning, you want to build a team around you. So when I was in wealth management, I advised entrepreneurs for a long time. And then in 2019, when I left and you're actually doing it, it's a whole nother show. You know what I mean?
Absolutely.
It's one thing to be like, oh, the book says do this. And then it's like, go out and do it, right? But I knew leaving and going out with the basics were. And the basics are you need to have strong bookkeeping and realization that you don't have to be the one that does everything. I think that if you're going to speed up the curve of success on any business, you got to understand who the team members are going to be. And I always tell my clients, and when I do coachings and advice, I say, look, you got to make long term plans with long term people. So spend your time interviewing that person and make sure that it's going to be someone that fits your personality and your business. And why? Because that's less hours that you're spending doing that stuff that, by the way, you're probably not very good at anyways. So I think that budgeting for a bookkeeper, budgeting for a good accountant is the best thing you can do in terms of having a successful business.
And would you say that it's probably also a good idea to get with a lender who understands entrepreneurship, who understands maybe your business model? Because we all know there's tons of different ways to make money online. And I found that my first accountant didn't understand what the hell I was doing from a coaching perspective, like what an online business looks like. Would you argue that that's the same philosophy you should have with
Oh,
a lender?
100% the same because there are so many different products and strategies in the world of lending. So right now we've been talking about the middle of the road conventional financing. But the reality is that there are lenders that are willing to do a deal for a self employed person after 1 year of being in business. Some will do it for less based on just income coming into their bank statements. I'll give you a great story. We just worked with a client, which we ended up closing, and he is like a streetcar legend. So people knew who he was. And so there's a company that's a streetcar company. They do wraps and customization. They use his name to attract more business. But he's not an employee of this company. He's getting a bunch of money from them, 1099 money, that's going straight into his personal bank account. So then he wants to buy a house. Well, what do? It's all his money is going into my business. You don't have a business. Not even you don't even have a business name. So what we did is we did a bank statement loan for him. I mean, he was making like 300 grand a year, like a ton of money. And then so we did a business bank statement. Then we set him up with an accountant. They can interview if they like each other. They can work together. They're working together, getting his S corp set up. We're getting all his things set up so that next year we're going to be able to refinance him into something that's more conventional, going to be priced a little less. But he still accomplished the idea of getting his home. He was getting married. He was going through all these life changes. And that's just what needed to happen today. but now he's in a path where this is going to happen in the future. I think that entrepreneurs have this idea that I'm not a real business for a long time.
Yes,
You know what
that
I
was
mean?
me. That was me for 5
Like
years.
for a long time, they feel they're not a real business. In terms of like the law, in terms of what you're operating, like you're a business, right? Like you're Amazon in the garage right now. You could grow. Every single business starts the exact same way with a state registration and Jesus take the wheel, right? Like let's see what happens. So the point is, they all start the same way. You are a real business. When I tell people, I tell them, look, take the seriousness of operating like a real business. Have a
Mhm.
budget, have a plan, have a business plan. Because you didn't get out to do this to have a hobby. You
Right.
got out to do this to be profitable. I have clients that'll come and be like, well, I run this business and it loses money every year. I go, you don't have a business.
You have an expensive hobby.
Yeah, you have an expensive hobby. You haven't made any money. You
Right.
know?
That's excellent advice. So, Jose, I know people are going to want to find out more about you, potentially work with you. Where can folks find you?
Old school way, my email is jose.tejada@rate.com. That's probably the easiest way to find me. On socials, I'm at Tejada Lending on IG and on LinkedIn, Jose Tejada in California with guaranteed rate.
I love it. Thank you. We're going to make sure to link all of those resources in the episode show notes. Thank you so much for sharing this information and for empowering us to still pursue all the American dream, but understand what it takes to get there in a successful way.
Absolutely.
Thank you.
Thank you.